Hi, my name is Sarth, and I'm going to discuss my analysis of Ctrip.com using Credit Suisse's Holt Lens. Ctrip is a travel service agency headquartered mainly operating in China. It operates in the underlying four main segments and generates about 80% of its revenue from hotel accommodations and transportation ticketing. With a growing middle class in China, as well as a positive change in world culture, people are beginning to travel more, translating into the historical growth of the travel industry. But this growth is expected to slow down over the next 5 years as the industry matures. Looking at the relative wealth chart, we notice that the company has consistently been generating economic wealth. During its early years, Ctrip began capturing the majority of the market share while fueling asset growth through acquisitions and incorporations, increasing the company's CFROI and thereby increasing its share value. Looking at the current trend, we see that the company is going through fade, which we'll explore through three economic drivers. Though it is still advisable for management to continue asset growth, the company will need to undergo major operational improvements in the near future to return back to original levels of CFROI. Overall, stock price has responded positively to the strong asset growth coupled with high returns. Sales growth in the past 5 years has been slightly volatile, but with no definitive trend. Recently, Ctrip announced a merger agreement with Knorr in the hopes of gaining market share and driving revenues, which will help boost sales in the short run but not provide prolonged sales growth. Plus, with consumers using their discretionary income for products instead of travel, Ctrip will be challenged to produce the growth it has seen in the past few years. With increased competition, we are beginning to see operating margins decrease significantly. In 5 years from 2009 to 2014, the number of travel agencies increased at a 6.9% annualized rate. Hotels have even begun to offer their own direct sales platforms, and commissions have decreased significantly, forcing travel agencies to offer minimum rates. Asset turns have been on the decline due to large investments in mobile app development. As the revenues from mobile customers continue to grow, we can expect these investments to pay off. Though the company has also increased its assets recently through numerous investments in the travel industry, these investments have not generated enough income in the short term to offset the costs. It is very noticeable that Ctrip is already valued much higher than its peers. Within 5 out of 6 comparable metrics used, Ctrip surpasses the industry average. This suggests that the stock is already overvalued and that investors are paying more for each dollar of sales and earnings. Based on the four aforementioned main points, we believe that Ctrip warrants a price of $26.33. Thank you to Credit Suisse for allowing me the opportunity to present this using the Holt Lens tool.